Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Tuesday, June 14th, 6:36 a.m. as I'm starting the video. And as always, please run your player at 1.5x for maximum efficiency. Taking a quick look at futures, Bitcoin down about 3%, oil's up about 0.7, nat gas up 1%. Equities are flat. There had been a fairly nice overnight rally in futures up to about, I think about 30 handles on ES, close to 1%, but they've faded that here since I got up this morning. So equities are more or less flat unless something happens between now and the cash open at 9:30. Macro front, really, the dominating features of macro are, got a VIX expiration tomorrow. That had a lot more significance when we were down towards 24 on the VIX. There's a big put wall down there, so that has kind of faded from importance. And then we've got, of course, the FOMC announcement at 2 p.m., then Jay Powell at 2:30. I noticed a Goldman note yesterday saying they're thinking they're going to go 75, 50, 75. I'm not a huge Fed watcher. I don't know if, 50 is fine and 75 causes more liquidation, or if 75 is good because it shows he's getting aggressive on inflation. I have no idea. But anyways, he may go one. Who knows? But the key is going to be the reaction to it. And, of course, most likely his comments in the presser will be very closely watched. So normally I would say, the day before a Fed, everybody treads water, leading up to the Fed. But, given what's happened, I have no idea if they keep selling today. I don't think it's a great sign that, they faded that 1% rally, overnight rally. So we're going to have to wait and see. And then we've got a big June option expiration, supposedly the biggest in history, on Friday, so that may have a big effect. And really, the big effect may come on next week after expiration, after all those deltas roll off. You find that oftentimes after a monthly expiration, especially a big one, that you have it's an inflection point in the market. And, that inflection point could be lower or higher. We don't know, but it's usually important after a big OPEX to stay on your toes. Now, before I get into the charts, which we have a lot of to go through this morning, I was thinking about the last 3 days and my feelings. It's been rough. Literally gap downs every day. Those are fairly tough to navigate. And I was kind of thinking about, how could I say it rather than just coming off as, whining about the trading and the market and all that kind of stuff. And I was thinking back, and I'll share this little story with you if you'll bear with me. Back in the day when I was running my business, I had a trip from Pennsylvania to Miami by way of Charlotte. And the first leg went off without a hitch, fly out of Harrisburg and head down to Charlotte. Done it dozens and dozens of times. Late, kind of early evening flight. Leave at about 7, get down to Charlotte about 9:30. And Went off without a hitch, no problem. Got to my gate in Charlotte with plenty of time. And on this particular trip, it was during the heat of our busy season, and I had a lot of fires going on, so I was wheeling and dealing, in the lobby area near the gate. On the phone, multiple phone calls, multiple issues, going, trying to get things squared away before the flight, and had made some progress. Then I thought I'd walk up to the gate agent and say, when are we going to board? And I went up and asked him, hey, when's the Miami flight board? He said, oh, that left 45 minutes ago. So I'm sitting there thinking, what a complete idiot to be sitting, 20 yards from the gate and just sit through your departure while you're on the phone. And so in that particular case, I had to wait, 3 hours for the last one out of Charlotte down to Miami. And, I eventually got there, but it wasn't without a lot of frustration and pain. And I was thinking about, on the blog site, we've gone over our macro tenants. We talked about we're in a bear market. We talked about the Fed has expressly stated that they want to do the reverse wealth effect. How do you do that? You knock down home prices. You knock down equity markets. And you jack rates to make the cost of money more expensive, to not only throttle the economy, but to knock down demand and try and get the beast of inflation under control, with the understanding you can't print oil, you can't print, copper, you can't print food, all the commodity inputs that are going to the moon. They can't really directly impact that, so they've got to do it indirectly through those mechanisms. And then you've got the element of shrinking liquidity, the QT element. So basically, the macro thesis was right on the money. And what has essentially happened is I was left sitting in the lobby when the plane took off. I'm going to just jump over here to the SPY chart. This is the first leg of the trip. Went beautifully. I think we made a lot of money in that area. And this consolidation was essentially waiting for the next leg. But that leg was down, and it's been sharp and fast. And to flip, it takes a moment or two or three to flip your book from long to short. Once you recognize that this rally is over. And in my particular case, a lot of energy, a lot of commodity type exposure, not a lot to tech or anything like that. I mean, you kind of know what I have. Pipelines, stuff like that, marine shippers, stuff like that. And the thing about these drops is the market is smart. If you go back and look, these sell-offs always stopped right at support, right kind of like where they're supposed to. And then so you're thinking, okay, it's at support, but in the next day you get a gap and then another gap, then you miss the whole move. And whatever remaining longs that you had on your book were decimated. So I really think, I haven't been a lot of help to you the last, 3 days. Hopefully you did a lot better than me in recognizing the rollover. But like I always say, you can't quit and you can't give up. You've just got to regather yourself in the storm and wait for the next flight. Yesterday, I was very reluctant and, okay, let's short now. And, let's just start. That's the essence of the story and the essence of the mistake. You can have everything right. Your thesis, blah, 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 can be perfect, but it's all about the execution. And if you don't execute, you either don't win or you lose a lot. And that's, been the essence of the last 3 days, at least for me. I hope you've done better. Okay, starting back on our charts, moving along. Had a little breakdown yesterday in TLT. I shared with you, saw a significant trade in the option market. A guy bought 24,000 of the 107, 102 put spreads for August. I followed that trade, just a handful. I'm not going out gonzo on TLT, but if they're going to raise rates, which they are, and given the prevailing trend, I went out there a little bit with a handful of that spread, and we'll see how it goes. Moving on to Bitcoin, down about 3% this morning. I mean, really, to get this thing back on track, you got to recapture 24,000. I think it's just as simple as that. Without that, I think you're going to 19 first on Bitcoin. That's where the weekly measured move comes in, about 19K. And then, we'll see what happens down there. But a break below 19K would bring you down into 12.5, which, again, is the more or less the pre-COVID type highs. And I think that's a good location to look for on whatever stock that you're trading, whether it's the indexes, FATMAAN, ARK, all that stuff, anything going back to the pre-market highs. And, here on the McClellan, down to minus 77, basically, normally you'd be thinking for a bounce here. Maybe we get it. Maybe they liquidate some more. They could certainly push this down to 90 or even beyond. Back in the COVID lows, it was minus 30. But you got to be very careful here. And now I'm super careful because I thought up here it was different this time. So, and it wasn't. It never is. NIMO always wins. And so down here, at least personally, I'm going to be reluctant to, put on swing type shorts. Now, does that mean today if we, break the lows of yesterday, you can't get short? Yeah, of course you can. We could go down 5% today. Who knows? So, but I would be careful about, extending those into multi-day or multi-week type positions. Over on NAMO, not quite as bad on NASDAQ. Down here at minus 48, this could certainly go down to minus 70, something like that today on a further liquidation of equities. Here we are on the SPY daily chart. You can see the multiple gaps that I've got highlighted for you. We've got the low of yesterday, 375 on the button. You break 375 today, you can get short against that. Or if it looks like 375 is going to hold, then you can be, of course, long against that with a stop below. That's a very, objective level. And you've got the multiple gaps above that you can use on, use as targets. This is just a magnifying glass on the same thing. You can see that, once we had the gap down yesterday, it was, more or less chop. There was a nice tradable rally off of 375 that got up towards 380, 381, 382, right in that area, but that got rejected, and then it was more or less chop from there and then fading kind of into the close. So 375 is your number, and then you've got the gap entry at 381. Yeah, 381.81, and that is a sizable gap. And you may adopt, as far as your trading, if you're, unsure in here, or you miss it, or there's a pre-market rally that brings price up in here, then I would just use the bottom of the gap as your entry point. And that's a big one. It's like $8. So, that would be a gap that you'd certainly want to participate in. And keep in mind, there is a level here at the midway point that corresponds to this low and some traffic in here. So I wouldn't get panicky if there's a little hesitation at the midpoint of this particular gap. Moving on to the Qs, very much the same thing, just 3 days of pure liquidation, stopping at 275.41 yesterday. I think that's your number for today. Right down here, you can use that as your pivot point. And if price is able to recapture 280, that was this touch low down here, and then you got your gap entry at 282.34. So there's some pretty good lines to shoot against, either on the long side or the short side, if they decide to take it down today. Pretty interesting setup on IWM. We've got the liquidation, of course, but it stopped right at this prior low at more or less 170. We've got a double bottom there with potential bullish divergence. You can see higher lows on RSI and PPO with price at the same level, so there is some bullish divergence there. I've got the gaps located for you, and then we've got a gap below, pretty sizable one actually, that I would think you'd want to participate in if they decide to take it down. And then a move down to 160 is going to, for all intents and purposes, bring you back to the pre-COVID highs down at that level. and you can double check that on the weekly chart or the daily chart if you want to expand that, on your own and verify that level. But 160 is more or less the pre-COVID low. Here it is on the 60-minute chart. You can see the various levels here. I think this 172.25 is going to be an important level. Why? Because you've got two prior lows back here at that level, and you've got a relatively large volume over price bar that will act as resistance. And you can see that yesterday it made a couple of runs at that level and ended up being rejected from that level. So that takes on a little bit more importance this morning. And I think, depending on how we open and how it goes, if price were to get above 172.25, I think it's objective to take a long there and see if you can get a rally at least up to the bottom of the gap at essentially 174.96. So that will give you almost $3 of upside. If we go on to Meta on the daily chart, we gapped lower below this 175 support level, came down into the low 160s. I think you can, again, use yesterday's low as the pivot point. If you break the low at 164.26, I think your next support is 150. May not get there in one day, but, it was down $10 yesterday. It could be down $10 today, I would imagine, if things get crazy. On the upside, to get this thing kind of headed in the right direction, it's got to recapture 175 back here at these prior lows, I would think. And then you've got a downtrend line to contend with on the way back up. All the activity in Apple yesterday was, once it gapped down, it spent the majority of the day within, $1.50 range, and then it kind of let go at the end of the day. I think what you want to do on Apple is to get long is a recapture of the prior low. You can see there were lows here that it thought about for a long time, and that corresponds to the prior low back here in May at 132.64. So if we open weak and then recapture, I think you can be long for 134. And if all the stars align and there's a rally, you've got the bottom of the gap at 135.20. Some nice clean lines on Tesla as well. I think you can shoot against 645. Below that opens the door to 620, which was the prior low. Above that, you could see a rally up to this 664 level, and you can see that lines up really, really well with this high volume over price bar here. You can see that yesterday made a couple of runs at that level, but at the end of the day, it was rejected at 664. So I think that's going to be an important line today on the upside. But keep your eye focused on 645 as the lows yesterday. If that breaks, I think you got $25 of downside. Microsoft, generally a weak day, 4%. Gap down, held this 245 level all day and then let go. I think in order to get long. Of course, you can use yesterday's close at 242.36 as a line. I don't have that in there, but if that holds, your target's going to be 245, and then 245 recapture would be a nice entry as well. I would be a buyer there on that recapture, and then see if you can get to the gap at 249. Amazon had the gap down and then found this prior low. You can see a bunch of support here, prior low here. So that line is going to be pretty important at 103 to hold that. You know, we had a little rally and then it ended up just above that level. So either 103 or on the recapture of 104.50, I think are your levels on Amazon. And we've got the bottom of the gap at 106.50. So at that point, if you recapture 104.50, you're playing for $2 at that point. And then this gap is essentially $3 wide. So if the stars align and you get that recapture and able to make it into the gap, could be a nice day if they take it up. But on the downside, if it's another liquidation day, I've got daily support at 96. Google pretty much held the line yesterday, had the gap down and closed right on this. You got a prior low back here at 21.20. I think that's your pivot for today. If it holds, pretty nice potential upside to the bottom of the gap at 2176. So that's what is that? $55 if there's some kind of a rally today. But on the downside, you've really got to focus in on 2120 with an initial target of 2060 where the closing low was, or 2040 on the spike low. So quite a bit of downside potential yet in Google to come back to these prior lows. Netflix, bad day at the office. Had the gap down, which I've marked, and then straight down. See, the thing about it is, if you were focused on Netflix, how fast can you possibly react? I mean, that is one fast bar there. And so, with no bounces or anything like that, you got to be on it fast, because once you get into here, then you get more and more reluctant or scared about a whoosh bar down and then a snap back. So these big bars, it's easy to say, okay, well, you broke that level and it's going straight down. If you're that good, I mean, you're that good. If you hesitated for even a couple of minutes, that would have been a hard trade to take. And then it spent the rest of the day. You can tell how important that line is. It spent the rest of the day there and then kind of gave it up at the end. I think today your pivot point is 171. If price can recapture that, you've got potential upside all the way up to 178. $6, and then you've got the gap if there's a rally. SMH, quick gap down, lost this 216 area, found support at 212. I think 212 is your pivot for today, with 216 being your first target, and then your second target, 218 at the bottom of the gap. I didn't mark it here, but I believe downside support is at 206. You may want to mark that on your chart. 206 is daily support. I'm going to wrap it up there. We went over ARC F, the ARC complex yesterday. I think really today it's all about, well, there's only three possibilities, right? They just keep on liquidating. They hold it steady into the Fed, or they put in somewhat of a rally, maybe a weak rally, given it's in front of the Fed, who wants to step in with a lot of risk. Maybe that's why they faded the overnight futures. I think we'll know at 9:31 what the plan is for today, because if they take we're basically flat. If that first bar is a bar from hell and they gap it down, or just bury the open, maybe it's going to be more of a liquidation day. So one thing I would encourage you to do, especially if you're new, is go to my last blog post. You'll see those macro themes there that you can take a look at to kind of read in on the backdrop. And like I said before, it's all about execution, and really the last 3 days have not been a shining moment in the trading annals of this group. So, but if this thing is going to go full bore recession, there's going to be a lot of opportunities in front of us, and that's obviously what I'm looking forward to. So calm your nerves, take a step back. What's done is done. Let's look forward in a positive way and catch the next move, whether it's a reflexive bounce or coming out of the Fed and this big OPEX on Friday. If it's going to go down, we should have some good lines to shoot against going forward. And so let's look forward to that. So let's wrap it up there. If you're new to the channel and you appreciate technical analysis with objective levels to trade against every day, whether you're an active trader or a swing trader, please hit the subscribe button, the alarm bell. Jump over in the show notes, find the link to join our group officially. It takes 15 seconds. Drop in your email address, then morning, noon, or night. If I have a thought on the market, I will pass it along, and you will get that info in a nice, neat, tidy package right in your email box, and you won't have to hunt for it. For the rest of you, thank you so much for supporting me through the good and the not so good. I really, really appreciate it. And as always, have a good trading day, and I will talk to you next time.